Aurelien, I suppose good news for Africa if you look at it on the whole. You're basically saying you don't see the crisis as it stands right now, your base case derailing growth. You talk about growth over the next 6 years or 5 years being around 6%. So just give us the bottom line story as to why you see Africa being quite resilient in light of all the turmoil we're seeing in the north right now.
Thank you. Yes, in fact, we have a quite at Moody's positive view on Africa as a whole. The report we published today, in fact, look at the region's impact of the European debt crisis. And basically, you have three channels to transmit the crisis. Trade through export, and Europe remains the main trade partner of Africa, but it's going down. You have also the capital flows, and in 2008, for example, with the Lehman collapse, a capital outflow of $40 billion occurred at that time. And you have also the banking system, at least African banking system, that is mostly reliant on European banking system to access external liquidity. So we looked at all these channels, and our conclusion is that if the scenario of growth rate in Europe between 0 and 2% over the next few years, while governments continue to take some strong measures to restore fiscal space, Africa should remain unscathed and have a growth that should reach 6% on average.
That, of course, your base case scenario, there's 0 to 2% growth for Europe. But if you just look at what's taking place in Greece at the moment, you see what took place in Spain overnight. One wonders if the crisis has really bottomed and we are going to start seeing, the kind of growth numbers starting to bottom off. What type of negative scenario? What's the worst case scenario that you, of course, have looked at when it comes to Africa?
It's clear that there could be an intensification of the crisis in Europe, but we see a lot of policy actions that are taken over the last quarters at the policy level, and clearly, if countries, for example, in the periphery, are not able to continue to adjust internally to restore some kind of competitiveness, the core countries may be unable in the future to really continue to support these economies. In that case, everything should be possible over the medium term, dislocation, a new credit event. But that is really not our central scenario. No, our central scenario at Moody's is more a model through with a growth that currently for the whole Europe is between 0 and 2%, with, of course, disparities within countries. But in that case, the shock for Africa will be different depending on the regions. For example, North Africa will be more affected because they still send 50% of their exports to Europe, while East Africa only 15%. Southern Africa, for example, if we take the region of South Africa, is more integrated in the world now, with developing Asia being the biggest trade partner. So, of course, on the portfolio outflows in case of a crisis, because of its structure, its large capital market, South Africa may be more affected.
Oh, you just talk about those capital flows. I mean, $40 billion exited the market during the 2008 financial crisis. We've seen a lot of money moving into Africa, yield seekers, growth seekers, I suppose, spurring that. Could this capital not just as easily exit, if we see this sharp rise in risk aversion?
It's difficult to say depending on the kind of shock and crisis, if it's a really acute crisis. But there are trends, underlying trends in Africa, especially using South Africa as a hub to, in fact, invest in the whole sub-Saharan region, and this is why you still see a lot of loans going to the banking system, because in South Africa you have the technicians, the know-how to invest. For example, the African Development Bank has an initiative to invest in private sector all across Africa as a whole, and a third to 40% of their exposure now is through South Africa, because they find the right people and the right institutions to relay their efforts throughout the region.